Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, July 29th, 2020, and I am pre-recording this Trading Places Live for Thursday, July 30th. Futures are pretty strong right now, so it looks like we, at least for now, are positioned for a pretty strong open on Thursday. We'll see what happens when we get there, but we do have a lot of earnings out this evening, and many of them we are seeing positive response. I'll be going over some of those a bit later in the show. A couple things we want to go through today in terms of our agenda. We will go through the daily market recap, tell you a little bit about what happened today, and then going to get into talking technically. Been talking a lot about the dollar and how it's been relating to materials. You know, dollar's been down, materials been up, but the same isn't true for energy on a relative basis. So I'm going to take a look a little bit at energy. We did see some leadership out of energy today, and that may continue if the dollar stays weak. Then we'll get into momentum sleepers. I want to talk about maybe one or two groups there that look like maybe we've got some possible trading opportunities. Earnings spotlight, as I mentioned, tons of companies reporting after the bell. We'll go through some of those, and then we'll wrap up the day with 3 you must see. Before we get into any of that, I do want to just point you to earningsbeats.com. Love to have you come in, subscribe here for our free Earnings Beats Digest newsletter. No credit card required. Simply type in your name, email address, hit the subscribe button. We'd love to have you join us. I think it's a very educational newsletter. It comes out 3 times a week, Mondays, Wednesdays, and Fridays in the mornings, usually before the market opens or around the market open. But it'll give you some stocks that are performing well on a relative basis, maybe stocks that are getting ready to report. Could be strong industry groups, weakening industry groups. It's just something, it's a take on the market that I think will give you some better insight as you approach the market each and every day. Also, if you want to try our service, we do have a $7 trial, 30-day trial. It is fully refundable. So if you sign up for the $7, we'll refund you the $7. And I think you'll enjoy it. You can see down below here, we've got our portfolios and how they've done. This is based on the way we look at the market. We use fundamentals, we use technicals with a really heavy dose of relative strength. So we want leaders. We want leaders continually working for our money. You know, we want to put our money to work in those leaders. So I think the results for the most part have spoken for themselves there. I think it's a great way to take a look at the market. And if you don't already look at relative strength and look at fundamentals, I think this will be an approach maybe that you can, even if you don't follow us verbatim, I think you'll find some things that you can fit into your own trading strategy. All right, let's move on. The daily market recap. Wednesday was a pretty good day. You can see the Dow up 160, the S&P 500 up 40. The NASDAQ of the three, the NASDAQ actually outperformed up 1.35%, 141 points. Easily now back up above its 20-day moving average, which is nice. Mid caps did very well, though, more than 2% gain there, and over a 2.5% gain in small caps. And you can see both of these areas, small caps and mid caps, moving to about a 6-week high. So they both seem like they're poised to go up and challenge that June high, and a breakout there would just add to the bullishness that we've already seen. As far as the sectors go, you can see energy leading. I mentioned, you know, if you look at where energy was back in June and where it is now, you can see that the relative strength just not there. Even real estate, which has been weak, is approaching that June high. Financials, kind of like energy, been lagging for a while. Industrial, same thing. They both had pretty good days today. And then technology, you can see the difference. Technology easily breaking out above that June 8th high recently, starting to turn back up again. Just so many areas of the market right now, I think, looking bullish. The 10-year Treasury yield, I'm going to go ahead and pull that up for you. Tomorrow or Thursday, as you're listening to this, it'll be Thursday. We do have the Q2 GDP, the initial estimate coming out. The estimate is for minus 35%. Q1, the number was minus 5%. This is not going to be a big shock to the market. The market already knows it. It's already been priced in. We saw the huge drop in equity prices back in late February and throughout March. And so that was the market discounting the reports that we're now seeing. What the market has been doing now, going back up, and in the NASDAQ's case, setting a new all-time high, the market is looking ahead. And just like it forecast the big drop in economic activity, right now, in my opinion, it is forecasting a big surge in economic activity as we look further down the road, the end of the year and into the beginning of 2021. So I like what I'm seeing here, but we do have to work our way through these some of these shocking reports, and we're going to get one tomorrow in terms of Q2 GDP. Initial jobless claims also will be out in the morning. 1.39 million is the estimate. Last week was 1.42 million. So we are expecting that number to come down a little bit, but we still have a long way to go. These are still very, very high initial jobless claims numbers. All right, moving on, talking technically. All right, so the Fed met today. Well, they met yesterday and today, Tuesday, Wednesday. And the Fed essentially came out and said they're going to leave interest rates unchanged. But they do believe that our economy down the road is going to be tied to whatever path or direction the virus takes. And I think that's probably what just about everybody thinks. I think if the virus gets a lot worse in the fall and economies have to shut back down, then I think you're going to see the market move back down, lower for a period of time. But if economies can stay open and we can keep the coronavirus under control, then I expect that you're going to see more of the same of what we've been seeing, which is the market continuing to find firm ground underneath and continuing to trend higher. That's what I look for. I don't know so much about this third quarter, going into the end of September. This tends to be a rough period anytime. So, every year, just about. So I wouldn't be surprised to see a little sideways consolidation. But I think once we get into the fourth quarter, especially if the virus is under control or if we're getting more and more good news about a vaccine, I think that's going to set up for a really strong advance into the fourth quarter and into the beginning of 2021. Looking at the looking at the US dollar, and I've got three things on this chart. I've got the US dollar going higher for the last 9 years. I've been talking about how, the dollar, potential breakdown the dollar would help materials. It also typically helps energy. So the second panel is energy relative to the S&P 500. And you can see energy moving higher there while the dollar was coming down. Energy was outperforming. As soon as we bottom here, put that double bottom in, energy didn't quite double top, just like we didn't quite double bottom. But you can see this chart is almost a mirror image of itself. When one goes down, the other goes up. When the other goes up, the other one goes down. And so right now we've got this uptrend, and I'm going to go ahead and annotate this so you can see this. And I've talked about this a lot, so this shouldn't become as any major surprise. But you can see, unless we get a big recovery this week, and this is a weekly chart, so it looks like we're breaking down, but remember, it's weekly, so we could close back up the next couple of days and potentially put a bottom in on the dollar. That's a big risk if you're in energy and materials right now. You really want to watch this. But what you want to see is if you're in energy and materials, you want this dollar to continue moving lower and make a definitive breakdown, because that could lead to some outsized gains in both materials and energy as we move forward. Now, the thing that's a little surprising to me so far is that when we look at energy on a relative basis, you can kind of see that we have been working our way lower here now for quite some time. And it's been a little bit of a channel, not a perfect channel, but we've been going down on a relative basis while the dollar's been going up. But the thing that's bothering me a little bit is watching the dollar weakness right here. But look at the energy on a relative basis is still down near its low. That's not the case with materials. Materials we've been talking about where we've seen a lot of relative strength of late. Energy has not seen that yet. So maybe we put in this relative double bottom. We start to play a little catch up here on energy. Energy was the best performing sector on Wednesday. So maybe that's the start of something. If the dollar keeps falling, though, I would certainly expect energy to begin to perform much better than it is right now. It's not a slam dunk. I mean, we saw the dollar weak in 2017, and you can see energy in 2017 underperformed. But if you go back and look at history, I think you'll see many of these moves up in the dollar coincide with energy going down on a relative basis. And many of these dollar moves to the downside coincide with really strong relative strength in energy. So that's something to keep in mind. Down here at the bottom, this is the correlation of the two. So it's just looking at the correlation coefficient between the US dollar index and how energy performs relative to the S&P 500. And as I was pointing out, you see a lot, most of the time, we're down below zero. That means there's an inverse or negative correlation. So they move opposite one another. And that's what we were pointing out here on the chart. So just want to make sure that you understand if the dollar breaks down, odds are that it should begin to favor energy stocks. Not a guarantee, as we saw in 2017. Whoops, right there. But for the most part, that is the case. All right, I want to move on. Let's move on to momentum sleepers. And in momentum sleepers, what I want to talk about here today is I want to go through first semiconductors. Now, you might say, well, this has been going straight up. This is a relative chart of semiconductors versus the S&P 500. And it's been going straight up. It's a weekly chart. And you can see that since back in August of last year, we have been above this relative strength line has been above its rising 20-day moving average now for almost a year. That's a long time. That just shows the strength of the leadership in semiconductors. Now, we do have pullbacks along the way. And when we get these pullbacks, we saw one back in July of last year. Very similar timing to what we're seeing now. We also saw one in November. We saw one in January, saw one back in April. My point is, we're seeing one now, or we've seen one here in July. Now, I don't know if we're going to continue to trend above this 20-week moving average, but that's what we've been doing for a year now. Until we see something different, I would assume it's going to continue. Therefore, this right here, this relative weakness to me suggests that we could have some great opportunities in the semiconductor space right now. And so what I wanted to do is just show you at StockCharts how you can, start with an idea and then follow it through to find some trading ideas based on just this one thought or this one, strategy or whatever you want to call it. So what I want to do is I'm going to go over here and I'm going to just go to the dashboard. And under member tools, if you go down below summary pages, you'll see scooter reports. Now, scooters, talk about this often, but it's just a relative strength tool. One thing that I like to do is if I'm looking specifically at a group and I don't already have, a different chart list set up and I just wanted to, I can run a scan if I want, but this is another quick and easy way using the scooters to find some trading candidates. So one of the things I would do is maybe just go in and change this period to the last week. So this is going to tell you the change in the scooter for the last week for all the stocks, all large cap stocks. But I'm going to change this to semiconductors because this is the group that I want to take a look at. And now when you look at this, you can kind of see it's in scooter order, but you can see the changes that have taken place here over the last 1 week. And so any of these up in the 90s, they don't usually move very fast. Now, Advanced Micro had a huge week. So obviously that jumped up from 94 to 99. It's now one of the highest scooter ranked stocks in the market. Xilinx, another one, they're going to be reporting tomorrow after the bell, Thursday after the bell. And if you pull up Xilinx, you'll see really nice move. I mean, we broke out above this over here. I saw a bottoming reverse head and shoulder pattern. So left shoulder, neckline, head, neckline, right shoulder, and then breakout. I think this earnings report on Thursday could confirm that we are now in a really nice uptrend. It's either going to confirm it or we've had a big head fake to the upside. What I do like, though, on this chart, when I'm looking at Xilinx, is the fact that the accumulation distribution has been picking up. So while it was going lower and lower and lower all the way through the pandemic, coming out of that low, you can see it's now been picking back up again. So I think accumulation distribution is supporting this move to the upside. All right, so that's Xilinx. And you might argue that over a longer period of time, it's been a momentum sleeper. Not so much in the last 4 or 5 months, because it has been rising pretty nicely. So what could we look at in terms of maybe momentum sleepers? Well, I would be looking at something like ASML or KLA 10 core. ASML has got a scooter score of 81, but it's gone down 14 in just the last week. So it was up around 95 or 96. So that means it's pulled back quite a bit on the scooter. So it might be an opportunity. Let's just pull the chart up and see what it looks like. Well, there you have it. We had higher prices. We had a lower PPO. So we had a negative divergence. What I look for is a 50-day test and or a PPO centerline test when I get a negative divergence. And that's exactly what we've got here. We're heading for the center line. We're right down near the 50-day. This is a stock that was at 400. We've now dropped almost 10% on the stock. So when I think momentum sleepers, I'm thinking, I'm not thinking energy stocks or, stocks that have been beaten up for a long time. What I'm looking for are stocks that have a lot of momentum, but have simply just pulled back in the short term. These are stocks that could present some very, very nice reward to risk trading opportunities. So ASML, I think, is very interesting when we look at this. KLA, same thing, negative divergence on the higher price, went down, got a 50-day test. The PPO is getting close to the center line, and it's well off the high. So you're not chasing. If you use this strategy, and momentum sleepers is probably a good way to describe my trading strategy. That's really what I look for, are stocks that have momentum and then just kind of fall out of favor for a short period of time. Traders kind of forget about them. They get maybe a little impatient. So if you're buying and holding KLA and it breaks out here, after 5 days, when you're looking at all these other stocks that keep going up, a lot of impatient traders will just jump out. And that's what helps to create those opportunities for those of us who like to buy these stocks on pullbacks and then simply wait for them to regain their strength. So I think, that's another one. KLAC, I think, is another one. But you could switch this. Okay, this is large cap stocks. How about mid cap? Mid cap's had a really nice day today. And if we scroll down, we can see some stocks down here maybe that have pulled back quite a bit. Let's see, Maycom, this was 88 a week ago. Now it's 82. I know they just came out with earnings and they beat. So the stock's going to be up pretty nicely. But again, this is why the scooter pulled back. The stock was up at 39. It came back to 36. After hours, I'm not sure, and I'll get into earnings here in just a minute, but MTSI after hours was back up over 10% today with its earnings. So back to $40. So going to break out, looks like, given where it's trading here in after hours. Let's see another one. Here's AS. Well, that one doesn't trade. There's your volume. If I see something with very light volume, I'm not interested. What else pulled back? There's another one that doesn't have a whole lot of volume. How about Form Factor? Came down 4 points. Look at Form Factor, very close to gap support. I'm not sure if that's earnings related or maybe that was an upgrade, but the stock was at 29.25. Looks like it got up to about 33, and at today's low was back down to 29.49, got very close to filling its gap. So this strategy can help you find some stocks that may not be right at the highs. I mean, you can see the stock when it came back and filled this gap before. Look what happened. I mean, that was the time to get it, not up here after it's been, accumulated and everybody's been buying it for 5 days in a row and it goes from 24.5 to 31. That's not when I want to get in. That's when the risks are high. I want to get in when it's coming back down, testing a gap support, moving average, price, trend line, something along those lines. That's when I want to be interested and get into a stock. All right. How about, well, I'm going to do one other one. How about we do internet stocks? So if we go down to internet stocks, check this one out. So internet stocks, you can see, first of all, this is a group that's been very strong in 2020. We've made a nice breakout after consolidating for a couple of years. So I think internet stocks look good. But here in July, they've pulled back quite a bit. So if we just use that same strategy, we'll go back to the large caps and then just type in internet. And now we've got this 1 week look. Here's a stock Akamai down 12 points on a scooter down to 74. Let's see what Akamai looks like. Well, look at that. Filled its gap after sideways consolidation. I think Akamai looks really strong here. Nice gap fill, 50-day test. That's the time you want to be thinking about getting into these stocks. Electronic Arts, I think they report maybe tomorrow. I think it's tomorrow after the bell. But another one, this was up over 140, now it's back to 135. Hasn't pulled back a lot, but you know, it hasn't really pulled back much since March. It's just been going straight up. So Electronic Arts, I think, looks pretty good. All right, let me go ahead and move on. Let's get into earnings spotlight because we have so many companies that have reported after the bell. I think what we'll do here is let's, this is PayPal. PayPal did break out at the close today, and the stock came in, blew away estimates, $1.07 versus 84 cents. Stock up another $10 after hours, up 5.6%. Huge move there on PayPal. Qualcomm getting a really nice reaction, up 12% to 104, easily breaking out above prior highs. Qualcomm's earnings, 86 cents versus 72 cents expected. Now here's one, ServiceNow. This one actually has come up a little bit off of its earlier low, but it's still down 4.5%. But another company that beat on their bottom line, $1.23 versus $1.02. Many of these companies, most companies that I've seen in earnings season so far have been beating estimates, many of them blowing away estimates. Now, I know a lot of those estimates have been revised lower because of the pandemic, but I think it shows you the resiliency that's in this market right now. Things aren't nearly as bad as what people thought they were going to be. And that's why the market is rallying the way it's rallying. Lam Research. Lam Research, big number, 478 on the bottom line, $4.78. Market was only expecting 420. So a nice beat there. Stock up about 2% after hours. O'Reilly, I don't even know, I didn't double check these numbers, but 710 versus 410 on the bottom line. $7.10. The estimate was $4.10. Stock up 7.5% after hours. This is why futures are looking really strong this evening, by the way. Let's see, what else do we have here? There's some other reports. How about Hologic, Holx, up 8% after hours. 75 cents was their bottom line. Market was expecting 36 cents. Not even close. Another strong one was Qorvo. Qorvo, $1.50 on their bottom line. Market was expecting $1.13. Stock up 7% after hours. Let's see, MKSI, $1.33 versus $1.16. Stock up almost 5% after hours. And then MTSI that I pointed out earlier, stock up over 10% right now after hours, 33 cents versus 21 cents. I mean, these are big beats. These are big beats. Now, as far as earnings coming up tomorrow, well, let's take a look at some of these. You might have heard of this company, Apple. And I'm going to pull these up on a relative basis. I'm just going to give you my take. I mean, Apple's going to come out with a good number. I'd be shocked if they don't blow the number out of the water. Now, does that mean the stock's going to gap up to 420? I don't know. I mean, you just saw ServiceNow. ServiceNow beat the number and was down 5%. So a lot of times the market's reaction is not necessarily the same as the quality of the report. Sometimes earnings are already built in, the strong earnings. And you can see Apple's made a huge run. The stock was down at 210 back in March, just hit 400 this month. So a lot of good things are built in, but I believe they're going to beat their numbers. Whether the market reacts positively, we'll have to wait to see. Amazon, another one, great numbers coming out. I'd be shocked if Amazon missed. And so you can see here on a relative basis, Amazon, one of the best performers. And at the beginning of the show, I told you, or I showed you the portfolios and how they perform. Amazon and Apple are both in our model portfolio. I'll tell you that. And you can just kind of look across and you can see the relative strength. All of these panels going up from left to right. This is what I look for when I said, you want your money working for you in leading stocks, this is what I mean. This is a stock that not only is its industry group beating the S&P 500, but Amazon's crushing the S&P, and Amazon's crushing its peers, which are crushing, the group is crushing the S&P. So everything on this chart looks good. Accumulation, distribution, very positive. These are the things that we look for. All right, Google, I just mentioned internet stocks and how they've been kind of, a little bit of momentum sleeper. Well, Google has been kind of sleeping right along with them. We did set a high about a week ago, but we've pulled back from that. When you look at the accumulation distribution, strong. One thing I don't like about Google is the fact that it had been downtrending. Now it's starting to uptrend again just over the last 3 or 4 weeks. So maybe they come out with a big report and they start this uptrend again. I wouldn't feel as good about Google as I do about Apple and Amazon, just based on the way they've been trading. If Google was going to have this blowout report, quarter, I believe it would be trading a lot better than this relative to its peers. So I worry a little bit about Google. Facebook, speaking of internet, we'll take a look here at Facebook, and Facebook has been sideways consolidating a little bit, still strong accumulation distribution, but this one too over the last couple months has been downtrending relative to the internet stocks. So this is one that I would worry about. How about a conservative stock like Procter & Gamble? They report tomorrow. Stock has been going straight up here over the last 30 days. It's broken out. It's in the personal products area, which has been going up. The stock relative to its peers has been going up now for about 2 months. Relative to the S&P, it's going up a little bit. It's going to be a safer play. I mean, I'm not looking for the stock to come out and go up 20% with earnings because this stock doesn't tend to do that, but it's a safer play. I expect it'll have a good report, but even if it doesn't, it shouldn't get hit too hard, obviously depending on how bad that potential news might be, but I think it'll have good news. Then we've got Lilly. Let me just give you 1 or 2 more here, and then we'll get into the 3 you must see and wrap this up. But Lilly, you can see, has been performing pretty well, broken out. It's been maybe just moving sideways for the last 5-6 weeks, but it was just at a 52-week relative high to its peers. So this is a stock that I would expect to do pretty well. Speaking of maybe stocks that have been, little momentum sleeping, how about Vertex? This was a stock relative to the biotechs on fire all the way back to April, looking on a relative basis. Since then, just sideways. It could use a big report. I don't know really what to expect. I think biotechs overall are still doing pretty well, and this had been a leader. So I'm expecting a good report, but it has just been going sideways for a while. We'll find out whether or not it's really, truly just a momentum sleeper. All right, let's move on. I'm going to go through the 3 you must see rather quickly here. These are just stocks that I think are looking like they could be really nice reversing candidates. AXDX. This is a stock that's heavily shorted. It broke out above about 13.5, 14. It went down to that level, just printed a bullish engulfing candle, volume picking back up. I think this could be a move back to the upside here. HBIO. This is Harvard Bioscience. Stock's been coming down from $3.80 all the way down to $3. Nice reversal on Wednesday. So this is one that's maybe got a little bit more aggressiveness to it, but it does look like it could reverse here. And then the last one I have for you is Pinterest. PINS. I also like this one after the downtrend. Looks like it's reversing back up above that 20-day volume picked up. So this is one that could do pretty well from here. All right, that is it for today. I want to wish everybody happy trading day on Thursday. Take care, and I'll be back next week at Earnings Beats for your next episode of Trading Places Live. Everybody have a great day. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.